First, I want to talk about don't do stupid. And, what am I talking about? No borrowing to make payroll, to pay your taxes, or cover a check to a different client, pay bills, take a long weekend, or even leave the practice of law. Take time at the beginning to make sure that you are clarifying your role and you've determined that the client truly has the ability to pay. Scam artists are creating literally billions of these checks every year. Okay. And there are a variety of ways that they do this stuff. Lawyers are not immune to this scam because people know that you're moving a lot of money through.
Welcome and thank you for joining us for another Justia webinar and the first day of our Justia Ethics Marathon 2025. My name is Nina and I'll be the moderator for today. Now, to kick things off, I want to go ahead and introduce our speaker, Mark Basingthwaite. Since 1998, Mark Basingthwaite Esquire has been risk manager with ALPS, the nation's largest direct writer of lawyers' malpractice insurance. In his tenure with the company, Mr. Basingthwaite has conducted over 1,200 law firm risk management assessment visits, presented over 650 continuing legal education seminars throughout the United States, and written extensively on risk management, ethics, and technology. Mr. Basingthwaite is a member of the State Bar of Montana, as well as the American Bar Association, where he currently sits on the ABA Center for Professional Responsibilities Conference Planning Committee. The webinar presentation that you're about to watch will be approximately 1 hour, and Mark will be taking questions from the audience once his presentation is complete. So if you'd like to submit those at any time, you can always click the Q&A button in the control panel at the bottom of your screen, and we'll get to those towards the end of the presentation today. Now, without further ado, here is Mark to discuss how to keep it clean with the green, trust accounting do's and don'ts.
Thank you and welcome, everyone. As Nia shared, we're going to talk about keeping it clean with the green. Okay. So we've got, you can see my face here and know a little bit about them. Let's just jump right in. I want to start out with just kind of a quick review of the basics, and then we're going to get in some real details. I've got a few stories to tell. I always like to tell stories from all the consulting I've done and some of the crazy things that happen when you work for a malpractice carrier. It's so that's coming, but that's set the stage. I want to remind you, IOLTA, what is that all about? It stands for Interest on Lawyers' Trust Accounts. And really, when you think about it's kind of a great tool. We are, as lawyers, are often holding property of clients or third persons. It's often money, obviously, and under the rules, 1.15, safekeeping of client property, we have to separate that, keep it separate from our own property. And that's really done through an IOLTA account because, most of the time it's very short term. And the cost of trying to set up a trust account for every client, it's just not worth the expense. So based on the amount of money we're holding, the short period of time, this idea came up a number of years ago. Let's just pool it. And we now have this rule that we need to do it. And so we just put everything in this trust account. And the interest on this, does not go to the clients, does not go to us. It varies state by state, but it often goes to a bar or bar-related entity. In some situations, for instance, there's foundations out there, and it's used to help people in need in terms of obtaining legal services, etc. But and it's not interest that is going to go to us or our clients. And typically, any eligible financial institution may hold or may host, if you will, these IOLTA accounts, and they qualify, whether it's a bank or credit union, they can qualify by agreeing to pay higher interest rates or dividends than what's available to the general public and businesses, to non-IOLTA customers. They do need, in terms of the entity, it needs to be federally insured, state or federally regulated, and they must agree to notify the State Bar of any overdrafts. So, there's this oversight component to it. And then, the type of funds that we are putting in here, they are often, think retainers. things that have not yet been earned, advance fees, things that are going to be taken care of, future fees and expenses, and money which may be owed to third parties. We have a settlement check comes in, et cetera. So it's non-business money in terms of my money or our law firm's money. It's other people's money. So okay, next. We need to comply with the safekeeping property rule again, 1.15. And really what we're talking about here, you need to promptly notify clients and third parties of any receipt of funds. And these are the common uh, sort of provisions among all the states. I've not seen anything that I can immediately think of where all of this hasn't been true. But again, this is the ABA stuff here in terms of what I normally talk about when we're on more of a nationwide program. You do promptly need to withdraw earned fees. You need to promptly pay out all undisputed funds, and we're going to talk a little bit more detail about some of this stuff. You need to provide a full accounting upon request, and you need to maintain complete records. And we're going to talk about what that means. I will share here. Sometimes I'll get these calls. Well, we have all these records. How long do we need to maintain them? And I'm not talking about files. I'm talking about the trust account records. Files a whole different seminar, but states that have, there are a lot of states that really haven't set anything formally down in an ethics opinion or in their rules. Some of the states that have, generally it's a 5-year period. And the interesting thing is they'll say 5 years from the date that whatever matter was closed. So if I'm a client of yours and you handled a divorce, and it's totally done, you've closed the file, et cetera, all the money's paid out, it's all good. 5 years from the day that my file was closed, you can get rid of the trust account records as they relate to me. I think the reality is a lot of these records, obviously have multiple clients, and most lawyers are that. I've never come across anybody that's just deleting specific entries, all the Bassing plate entries or something like that. We kind of just keep it out there. And then, so you're really getting to say 5 years past, once you wind down and then finish close out your trust account. I would hold your records for 5 years after that. But okay, so that's kind of some backup. Our background kinds of things. Let's really start to dig into some stuff. And I want to really start this by talking about some missteps. And folks, we need to talk about these missteps, learn from the mistakes of others. You cannot believe over the years the things that I've come across and that people will do. What I need you to first hear and take this to heart. We need to understand what you shouldn't do because of this reality. The lack of intent, shoddy record keeping practices, and or restitution don't get you. It's not a get out of jail free card, if you will, from the disciplinary side. Okay. You don't get a pass. I didn't intend to do any. I don't care. I've seen lawyers lose licenses for shoddy record keeping practices. They didn't intend to be, steal any money, but it gets so messy. So, okay, that doesn't fix the problem. And here's the first rule. And if you listen to it clearly and you take it to heart, 100% of the time, this will do more to keep you out of trouble than anything else. Client funds belong to the client, period. End of discussion. That's just okay. So start there. Always keep that in the back of your mind. So now let me just share some of the crazy stories and the things that happened over the years. First, I want to talk about don't do stupid. And what am I talking about? No borrowing to make payroll, to pay your taxes, or cover a check to a different client, pay bills, take a long weekend, or even leave the practice of law. Now, some of this stuff may seem somewhat obvious. I'm this list. None of these are made up. These are all real things that have happened where people, internal attorneys have taken money and they've gone on. One guy went to Las Vegas. This is a number of years ago on a gambling weekend, and he took a bunch of client money with him. Here's the crazy piece. He had a fantastic weekend, at the tables, whatever he was doing, and made a bunch of money. Came back, put it all back in, so the client, let's say what the specific dollar amount was, but he borrowed 25 grand and put 25 grand back, between Friday, no harm, no foul in his mind. Barr didn't see it that way. There was a substantial consequence for that. Okay. I've seen all this stuff. So, no, this is not your money. You can't do what you want with it. Don't try to hold on to undisputed funds as leverage over disputed funds. So if there's a settlement check here, and you know, they the client says, let's say you are owed 20,000. The client says, no, this happened too fast. It's only 10. I just, it's overpaid, So this 20 grand is disputed. Okay. You have to hold on to that, but you can't say the other 250,000 or whatever this is sitting there. I'm going to keep this until you and I come to an agreement. Uh-uh. You cannot do it. Undisputed funds have to be distributed to whoever they are owed to, whether it's a third party or the client. Okay. Don't try to keep unearned advance fees, even if fired the next day, because for all intents and purposes, there really is no such thing as a non-refundable retainer. And this issue that comes up in state after state, year after year, all over the country. Lawyers just think they could do it. And just because you call something non-refundable doesn't mean a darn thing. Even the states that currently just come to mind that have a rule about sort of what a non-refundable retainer is, and some ethics opinions that they talk about how if it's still how do I want to say it? You are best advised to treat it or view it as still unearned. You put that into your trust account, because if you are fired the next day and did absolutely nothing, and that's not, you can't keep it just because you called it non-refundable. Okay. Now there is such a thing as a non-refundable retainer, and I know this sounds contradictory here, but I think understanding what it truly is will help you keep out of trouble. And typically you will see this, with corporate entities in terms of clients, and very specialized practices, or, just a high demand lawyer kind of a thing. But if a company wants to pay me a certain amount of money to be available to make sure that the competition can never hire me, they can put me on retainer, and they are paying me to be available. Okay. Anytime they call up and say, here's a job I have for you, this is what I will bill them the regular rates and all this. I am receiving a fee simply to be available. That is earned upon receipt. Um, Now, again, double check with your bar if you want to go down this path. But they really only look at this. You can't say, well, because I accepted Mark's divorce, I can't take other work from, I can't take the divorce from the other side. That's not what we're talking about. That doesn't work. Some lawyers have tried this. It's truly, think very sophisticated situations, sophisticated entity and specialties. This rule or this process or tool is not generally viewed as available to every lawyer out there. It's so I just caution you about playing game. Okay. And finally, don't try to apply client funds to cover a client's previous unpaid bill. So if some settlement funds come in on one matter, and I'll be the client here, and I stiffed you or I'm way behind on some other matter, you can't hang on to these funds that I'm owed, um, to try to force me to pay, or you just can't take them and say, Mark, you owe me these, 15,000 on this other bill. I'm going to take that. No, that's not optional. They are separate matters. Okay. So don't play these games. Now let's go a little bit further and talk about sloppy. Um, the first, and I've seen some problems here. Don't immediately withdraw earned funds. I understand why a lot of lawyers do this, and typically this is going to be more of an issue in the solo small firm space. But um, the problem is sometimes the bill gets disputed. So let me give you an example. I'll be again like a divorce client of yours, and let's say I have 10,000 on retainer. Okay. And the first month you do a bunch of work getting everything going, and then you send me this bill. And let's say you've earned 3 grand out of that. And so you send the bill and you take 3 grand out because you got bills to pay. I get it. Okay. And you think everything's good. I get the bill and I dispute it. And I say, it's not, I dispute this whole thing just for the sake of simplicity here. You need to put that 3 grand back because it's disputed. But if you've spent it, you've got a problem. So these cash flow issues can unintentionally get some lawyers in trouble. And I've seen this happen. That's why we talk about this stuff. A better approach is to do something like this with all of your clients. And I refer to it as sort of a 10-10 guideline. There are different versions of this, so sort of whatever works for you. But generally, what'll happen, the bill will go out and you allow 10 days for that bill to be received. And you explain, well, Mark, here's the bill, I 150 to do this, 200 to do that, et cetera, so you have your detailed bill. And I have 10 days to dispute it. So you're going to wait 20 days. If you hear nothing after 20 days, move the money. And you might even talk about if you have any concerns about any of your bills, please feel free to reach out. At the very, very beginning, or, sometimes you put a little note on the bill, whatever. But so if you don't hear, and then it's just trying to avoid this problem with cash flow issues. No commingling of funds. A situation a number of years ago where I walked into a small firm and a really good group of people. They really were. We had a lot of fun this day and just talking about all sorts of things. And the process normally, as you get near the end of the day, is a process where I sit down and talk to the appropriate folks, whether it's attorneys and or staff, but about back office, what's going on in the back office. And we just look at all sorts of things, a lot of which has to do with trust accounting. And in this situation, they were talking about, the question I asked was, do you have any firm money sitting in the trust account? The answer was, oh, yeah. I said, really? How much? Oh, it belongs to a lot of us. It's actually marked as a Christmas savings account. We're very proud. We allow attorneys and staff who want to utilize this to save up for Christmas and put a little money out of each paycheck in, and I said, it's a great idea. You can't put it in the trust account. You're commingling personal property of attorneys and staff with money in of clients, and that is an absolute no. You cannot do it. So no Christmas account fines, okay? Sometimes you'll see lawyers, I've had a great year, but I don't want to pay out a bunch of money in December because it's going to bump me up to the next tax bracket or something like that. And they want to let it sit for 4, 6, 8 weeks. No, you can't. It's just the rules are clear. You can't commingle. So the one exception will be sometimes these accounts, there are some fees and costs with maintaining the account, and states always ask, look at an ethics opinion, look up your rules because it's going to vary a little bit here. But in most states, you can have sort of a small amount. What does that number look like? Normally, it's something 50 to 100. Some states will allow it up to 200 of firm money just to sit so that anytime, or, the monthly maintenance fee is not coming out of the interest or any client funds. They're not to pay that. That's a firm expense. That's sort of an operating expense. So you can put a little money just to cover that. And you kind of keep replenishing it, but don't let it get too high. And that's the only exception. Finally, no loans beyond the advancement of costs or fees. Again, period, exclamation point. Now, yes, you can advance fees and expenses, but I'm talking about loans to help somebody live, to pay the car bill, to do all kinds of things. And I've seen lawyers do this. And we'll just, have a little side note here, you can pay us back out of the settlement funds. And, no, you cannot do it. Now, there are some limited exceptions in some states, but really what those exceptions say is it is fine if you wish to provide assistance to someone under certain conditions if they are truly in need. If the family is out on the street and the kid has the flu and and you just I get it. And but you cannot it has to be a true gift. And there's no expectation of repayment. No, you can't accept any money back from family or friends of this client's family. So hear me clearly. No loans. Okay, the gifts now and again. Check your individual rules. Okay, so that's kind of some of the ethical things. Let's dig down now and talk about some of the problems. Okay. Um, I really think some of the problems that we can get into in terms of with some money situations and disputes over money arise because there are some assumptions and misunderstandings in play. Now I'm going to share a little more detail here in a moment, but I want to start and sort of it's as an aside, take time at the beginning to make sure that you are clarifying your role and you've determined that the client truly has the ability to pay. Okay. This is sort of some free ethical risk management advice outside of the trust account, because it really helps avoid fee disputes from developing down the road. So, that's just a common thing that a lot of lawyers still miss, believe it or not. But let's talk about trust accounting. Remember, and I think this is important, you are in someone else's employ, right? You have been hired by someone else to help them resolve or work through their legal issue, to handle the litigation, to set up the trust, whatever it is. Okay. So let's talk about if the trust account is going to be involved, and let's talk about procedures. What are your expectations when it comes to the retainer? Is this an evergreen retainer? Is this an initial retainer held for the final bill while clients pay their bills as they accrue? That's set the expectations. This is how this retainer works. This is how I will bill against it. Whatever you're going to do, explain that so they understand it. Um, let's talk about settlement funds. A lot of lawyers, and boy, you see this, and most of the time, I'll admit this works, or it turns out to be okay. But what happens if it doesn't? What I'm talking about, the settlement check comes in, and the client comes in, signs the check, and you're going to make this deposit, and you give them their portion, and out the door they go after we have your review of the settlement statement, et cetera, et cetera, et cetera. What happens if that check bounces? And I can tell you all kinds of stories where these checks have bounced. Sometimes they are fraudulent. Sometimes an insurance company goes down or a bank goes down overnight. This would be insurance company. Banks are different stories. Sometimes there are just problems with the check. There could be all kinds of things. You know, could be a missing, insufficient, or incorrect endorsement, as an example. There could be insufficient funds in the account, drafting error, bank error. Just the list goes on and on. And sometimes there are forgeries out there. I've seen them all. So what happens if the check doesn't bounce? And here's at other times people will say, well, I've contacted the bank. I made the deposit yesterday. They're telling me the funds are available. I don't care if the funds are available. The bank is required to make the funds available under federal law. Okay. That doesn't mean they're good and collected funds. That doesn't, in many instances, happen, particularly with paper checks, in 24 hours. What if it bounces? And it happens. You've got a problem. Even if the check is good because there's sufficient funds in the trust account to cover it, someone else's money covered the check that you wrote before the deposited check, the settlement check cleared. You see where I'm going? So now you have a misappropriation in play. And lawyers, hear me clearly, have gotten into real trouble with this one. So that's explained that it takes time for checks to clear. That's talk about, you're going to come in and it'll be, 3 to 5 business days, et cetera. And that's given an appropriate time. So they're not screaming, I want my check right now. You have, if these are not good and collected funds yet. Okay. And so, one of the other things you could talk about, do you want to have an interest-bearing account? And sometimes that makes sense. The thing that I would say with interest-bearing accounts, if you want to do it, there needs to be a sufficient amount of money here. Now, what does that mean? That's anybody's guess. But I would think at least 25 to 50 grand, and you're going to hold it for at least 30 to 60 days. And you really sit down and say, well, does the cost of opening this account justify the amount of interest we could earn for the period that we're holding it? And if the math sort of adds up, that's yes, okay. You then have the client, you put this account, if you will, in the client's name. Okay. Don't create some interest-bearing trust account for all your clients. They should be completely separated. It's just a math nightmare trying to deal with whose portion of the interest is for these days. So keep it separate, and you and your client can decide whether you want to do that or not. I would think the client should be involved in that kind of decision. So there are a couple of things to think about in terms of settlement, or I'm sorry, in terms of educating the client. Okay. Now let's really get down into where lawyers get into all kinds of trouble. I want to tell a story. A number of years ago, we had a firm that had multiple locations, and this way, it's a smaller firm, but I would say, memory is, I don't know, 12 to 15 lawyers, and there was 3 locations, and this firm had a history of problems with the trust account. And a colleague of mine was initially brought in to kind of do some education work with the firm. And we had hoped that that would help solve the problem. It didn't. It didn't. And I eventually was asked to come in at the request of the bar because the firm was court ordered to get some education and, straighten out. My job is to go in and work with them. And to make a long story short, they just didn't want to have anything to do with my prior colleague and me and the bar. This is ridiculous. What ended up happening, there were a number of thefts over a period of years out of the trust account. And we're not talking about, small little things. Okay. This was really adding up to quite a bit of money. And the problem was they didn't want to deal with the lawyers with these rules. They just wanted to practice law and do their own thing. And so they turned complete and full oversight to non-attorneys. And some of the non-attorneys, were stealing money. And they simply refused to say, this is not, we don't, we're going to try to hire the right people. Long story short, eventually, through court order, the firm was forced to dissolve. The order was kind of interesting how it was written, but the gist of it was the main partners were forever prohibited from being responsible for any client funds of any type, and there were some other sort of restrictions placed around all of them, but it basically forced the key players that were responsible for all this into retirement, and they did retire, in shame. And the firm dissolved, and that unfortunately that was the right outcome for this situation. But it's all because they didn't have any attorney oversight. Rule 5.3 is in play. I get that we're not, some of us anyway, aren't trained accountants or CPAs, and we're not real good with numbers. But, great in the law firms or the law practice side, but then we just don't have any interest. Okay, you can go out and hire people. I have zero issues with this. But it's your responsibility, 5.3, to make sure that the people that you put into place to do all this abide by the rules. The bar doesn't discipline your staff. It's your license that's on the line. So I want to talk about basics of process and talk about how you can document and get this oversight piece taken care of. Okay. I have for years talked about this, and I'm going to today to some degree, sort of it's in this paper context, and I realize, more and more of us I haven't seen a paper bank statement probably in, I don't know, at least 8, 10 years. Um, so, but the ideas here will hold in either setting. Um, it's about, and so just think through what your own process looks like. How can I kind of get where Mark's going with our own process? The bank statement really needs to be reviewed by an attorney. And in the paper world, the bank statement needs to come unopened to the reviewing attorney, if there's more than one attorney at the firm, before any staff touches it. Some firms will even have it sent directly to an attorney. And I do think it's worth rotating this every, 12 months maybe. Um, for a couple of reasons. One, I think it's important that lawyers at a firm, at least the key partners anyway, understand what's happening financially, particularly with the trust account. You need to know what's going on. And two, sometimes the rogue person is an attorney. I will be sharing some stories, and sometimes attorneys go rogue. And if it's the reviewing attorneys going rogue, you guys got a problem if you're a firm, right? So the reviewing attorney will get the bank statement, and he or she is going to look to make sure there's a corresponding check, if you will, for every debit in the account. We need to understand, what's going on, the EFTs, so if there's a transfer, why are we paying $183 to eBay? What is that? You need to understand. So you want to make sure this check. You want to look at the signatures. Does everything just look normal? And this doesn't take a lot of time. You can do this fairly quickly. And then you turn the bank statement over to the account reconciler, whoever that is. And you need to do a double reconciliation. And what that means is we're going to reconcile the bank statement with the general ledger. And it should balance to the penny. And then we're going to do a separate reconciliation to the individual sub-account ledger, right? So when we have a trust account, you have to track all the individual sub-accounts. Okay, that's not optional. And you're doing the sub-account reconciliation to catch things like, let's say we have two Shirley Smiths, Shirley P and Shirley C Smith. I want to make sure that we put the deposit in the correct account, or we paid the right Shirley. You see where I'm going? And so we want to make sure that the sub account and all these entries balance to the penny as well. This is not optional, folks. So I will say, well, once the reconciliation is done, there's going to be a reconciliation report completed. That goes back to the reviewing attorney. She does a review of the numbers. And then you put your John Hancock and a date on that statement. And even just print out the digital statement, or some, you need some way to document, I, as the reviewing attorney, accept accountability. I am willing to put my license on the line for all the activity that occurred this month in our trust account. I am abiding by the rules. I'm assuring that everybody, all these non-attorneys, this is what 5.3 says. So I accept it, and I'm documenting that. That can make a huge difference. Okay. The one thing I want to add here is, if something is out of balance, please stop and take the time to figure out what that is. And if you need to do a bit of a deeper dive and hire somebody to do that, do it. You cannot and should not leave it out of balance month after month after month after month. That's going to create problems. To push this sort of to the extreme, and I've seen this more than a few times in my years here now, so I'm coming up on 28 years. You'll get to the end, and then we're going to try to close out the trust account, but it's out and it's been out for years at different amounts, and now it's out, by $5,230. I'm just making something up here, obviously. And the lawyers will call the bar, they'll call me and say, I'm pretty sure it's just money that's owed to us. Can we just kind of keep that, just, make an entry that no, you cannot. You have to figure it out. And I have seen after years and years of not dealing with it, just putting our head in the sand, we'll figure it out some other time, that the process not only costs a bit of money because you need to get somebody in here that's really looking through everything, and they may or may not figure it out, depends how good all your records are. But I've seen this process take 18 to 24 months. Just saying, it's going to be a lot easier. Fix it when it comes up. Okay. So that's sort of the basics. Now, um, I want to talk about some day-to-day practice tips. Let me share one story. This is a situation, a law firm. They would get checks and they wouldn't log them in nor endorse them at all until they had enough to make it worthwhile. They're trying to fill out the deposit slip. Okay. They just let the stuff sit. And they did put it in a lockbox in this situation. Well, what happened in this firm? The There was a burglary overnight, on a weekend, and this lockbox was one of a number of things that disappeared. And of course, there's this little write-up in the local paper about this firm that got, you know, uh, burglarized, and some things, including lockbox, were stolen. The firm knew they had 6 to 8 checks in there. They had no idea who. The problem was they had something like 12 to 15. I mean, well more than 6 to 8 people calling in and saying that was my check that was stolen. I don't expect, this is not on me. It was just a mess. Log your checks as they come in. Restrictively endorsement. If something happens, they get lost, they get stolen, it's going to make replacing them a lot easier. So why not? One thought, one idea. uh I like audit trails. If you're using a digital tool, make sure, and it has an audit function, please turn it on. Learn what it does. Um, Review the report. Whoever's the staff, they may or may not even realize that there's an audit trail there, but they're not going to mess with it because you're checking to make sure it's on all the time and reading the report. It helps just keep people in the guidelines, in the bounds, if you will. So, okay. I like check request paper trails. Let's have a formal process. Um, what else? I like two signatures. If the account is going to be, you know, you're going to have write a check 500,000 or something significant. If somebody's bringing $25 to Starbucks because a couple of coffees for a meeting, I don't care. But if you're going to, I like the idea of two signatures. So there are a couple of ideas on checks, and I have a few more coming up here in a minute. Um, I want to talk about back office best practices. Getting tongue-tied today. In all the experiences I've been involved in and seen and heard, I can't tell you how often it's been internal. Okay. Yes, there are scams out there and fake checks and business email compromise. This is not a social engineering awareness class. We're talking about trust accounts and just the best practices internally. Um, I have seen situations where a senior partner in a nice sized firm, this happened up in New England. He was an estate planning partner, reasonably well off during retirement. For whatever reason, he ended up stealing quite a bit of money from several clients. And it just made no sense. He didn't need the money. I have seen, there's a solo attorney. This one, I knew this guy, worked with him for many years, really a great guy. And he had, for the bulk of his career, a long-term entrusted employee, family friend as an office manager. This individual would babysit kids when they were younger, went to college graduations, was invited to weddings as these kids grew up, truly viewed, if you will, by particularly his kids as sort of a favorite aunt type person. He was devastated when he eventually learned that over the years she had stolen around $200,000 from him, and just devastated. I've even seen a husband and wife team, husband lawyer, spouse, office administrator, a younger, newer marriage, and the wife was stealing money right and left. Uh, Needless to say, that marriage didn't last that long. I could go on and on with these stories. Okay, people do bad things, and they're not going to come wearing a T-shirt that says, keep an eye on me. I'm going to steal money from you. They aren't going to announce their intentions. So we need to understand that. So what can we do in light of this reality? I would have you strongly consider doing some things like this: inventorying and properly storing tangible property. I two quick stories. There's a very expensive diamond ring that a lawyer was holding, and they put it in a filing cabinet. Sometime later, when we went to get it, retrieve it, it was gone. I will share. Eventually, it was found on the finger of an employee's love life. Okay, ugh, not good. Another lawyer, he was holding a car, and this car belonged to, client criminal, that's a drug gang, think that kind of stuff. But this car was one hot ride. And this guy, the lawyer, really loved hot rides. Just, he just couldn't resist. And one time he just thought he'd take the car out for a little spin just because he felt he could. He wasn't thinking and not really understanding everything, and he actually drove the car into the territory of a rival gang, excuse me, a rival gang, and it was shot up. He's lucky he got out without having a bullet. Now, thinking bullet. Car took a bunch of holes, but you know, no, you need to put these things, store these things, hold them in an appropriate, responsible way. Whether that's a safety deposit box, a fireproof safe, or some you know locked commercial storage unit or something. I would encourage you to verify employment histories and personally speak with references of anybody that's going to have money handling responsibilities or accounting responsibilities. I would also encourage you to check the social media pages of these folks. I really like this next one. Conduct an outside audit during the vacation of any account reconciler. What you will see at times that the account reconciler will be this long-term trusted employee who's always there. First one in the morning, last one, doesn't take vacations, will occasionally work on weekends, and it's just the most loyal, invested employee, and everybody loves him or her. They're putting in those kinds of hours because that's how they're covering their tracks, and they need to do this. Okay. I don't care. Yes, I'm not saying distrust everybody. I'm saying trust them, but you also have to verify now and again. So when if I were hiring anybody for this role, I'm going to say, look, here's what's going to happen. Once a year, you're going to have a mandatory 2-week vacation, and we can talk in advance. Work with your schedule if you want to go on a cruise sometime, or and work it out. But when you're going, I am going to conduct an out or have an outside audit conducted to make sure the books look good. Okay. If you can, separate check preparation responsibilities from account reconciliation responsibilities. I would always limit access to the trust account checks in terms of, everybody everybody in the office doesn't need access. Only the check preparation and maybe a lawyer, a couple lawyers need access. So that's limit access here. How do we do that? I would also limit access and try to separate out check preparation responsibilities from the account reconciler. They should be two different people. Even if it's just a solo lawyer and a staff person, I would try to make that separate. I also like different color checks, different size checks. I've seen situations where lawyers will pay their bar dues on a trust account check. I've seen they pay their child support on a trust account check. And sometimes the excuse is, oh, I'm sorry, this was the wrong check. Yeah, I don't buy it because at times I know a little bit more about all this. But if they all do look the same, let's have them different. So, because occasionally I know a mistake can happen, I will admit that. Okay. Periodically look at the check stock and go to the very back. When people are stealing checks, they're stealing from the back. Okay. So if you have a box of checks, and it may be a couple years before you get to the bottom, need to reorder, go and look at the back and never leave signed blank checks around or have a signature stamp made. I have seen that abused far too many times. Um, Absolutely not. Absolutely not. In my mind, I call that sort of a victim here, a tattoo on the forehead or something. You're just asking for trouble. Don't make it easy. Okay. Next. And always watch for the warning signs. Okay. Now, just be aware, again, staff and attorneys do make mistakes, make bad decisions, do go rogue. Sometimes it's intentional, sometimes it's not. Sometimes I'll make me the bad person here. We're dealing with my wife just lost her job. I just got a cancer diagnosis. Money is a mess. I'm going to borrow a little bit and I intend to pay it back, and here's how, but I don't because I can't. And then it just starts spiraling. I have seen this play out, this sort of exact kind of scenario more than a couple times in my career too. So you need to just understand that nobody's going to announce their intentions. It's going to be subtle, but look for warning signs. Um, they're not going to be foolproof. Sometimes the warning signs don't lead to, that doesn't mean everybody's trying to steal if you see these things, but be sensitive to it. It's worth digging a little deeper, whatever that means. So becoming aware that a trusted staff person is having financial problems. What can we do to help? How are you doing? You witnessed the demonstration of addictive behaviors. I've seen that's a big one that can be. Realize the person is living beyond their apparent means. That's why I have a picture of this kind of car. There was a situation, and this has happened once or twice, whereas that person did pull up in really expensive car and did have no means to buy this thing. I learned that the individual never takes extended amount of time off. That is a very common thing you will see in these situations. It's the dedicated, trusted employee. Okay. Now, I also want to briefly talk about There Be Pirates about. You know, um, I could tell. Well, let me tell one story. Um, Law firm, and this did real estate stuff. What I'm going to share, it doesn't have to be a real estate law firm. We're seeing this kind of attack on all kinds of practices, but they did do real estate, and they had an eFax account. Um, And a fax came in one day from a known trusted party. They expected it. It was, matters closing and everything. And they opened it up. They saw the wiring instructions that issues an attachment, a PDF attachment, which is again standard practice. So they dealing with this, you know, uh, real estate agency and all brokers, whatever. It's all the same. They just knew everybody. So there's no warning signs. So they wired the money in accordance with the instructions on the PDF, and they ended up sending over $800,000 to the wrong bank. And as an aside, that was never recovered. What happened? Well, the firm was breached, and whoever breached, he, she, they, we don't know, were monitoring everything that was going on with this firm for about 2 months. And they took great interest in this eFax account. And then, the right time, the right setting, they made their move. And basically, they were intercepting and reading everything. And so they intercepted this PDF, changed that routing number, and then sent it on. So, there's no indication, right? Who'd have think? Who'd have thunk? Well, they learned a hard lesson because that's not malpractice. There's not an $800 or 800,000 insurance payment coming from your malpractice policy on this one. That's a property loss. It's not professional negligence. Okay. So it's a problem. I will share in the interest of time. Um, there is a section in the materials that will go into things that you can do in a bit in more depth than what I'm going to share. But the one thing that you can do in situations like this to prevent this is have a formal policy money, whatever significant means to you, I would say anything 2,500 and over probably is worth doing it. It will never be moved unless we do an out-of-band communication to verify the veracity of the wiring instructions or whatever it is, the instructions to move money. And so an out-of-band means in this situation, we have an email PDF coming in, knowing by previously verified contact information what the person, the sender, what her email address is, or her phone number, all that. I'm going to change the communication channel. So I'm going to pick up the phone. Hey, it's out of band. I'm changing the communication band, email to phone. Hey, Sue, yeah, I got the PDF. Thanks. Just want to confirm, you know the shtick? Is this the correct routing number? Here it is. With a little bit. Yes, not a problem, Mark. Great, thanks. I'm going to move the money. No, something, stop. Somebody's been breached. It truly can be that simple and that easy. Now, don't, look at the email and see this phone number there, and you call that phone number thinking, well, I'm changing the communication channel. Yes, you are, but you're using the phone number that the bad guys gave you. And, AI voice, deep fakes, whether it's voice and hear me clearly, deep fakes of video and audio are a very real and significant problem already. Tens of millions, hundreds of millions have been lost as a result of cloned voices and videos. So, you can't trust. You need to have previously verified information. I would also encourage you to look at a strong password policy. You have to have different passwords for every account. You should change them at least every 6 months, for financial accounts of, so the IOLTA, the bank, whatever, your investment plans, et cetera. I would strongly do that. They should be at least at this point, I'm running 25 characters if the app will take it or the website will take it. More and more of the guys that I work with in security space are running now 35 to 40 characters, and there are reasons we do this. But I would never do anything under 16. Never. Just so you have to have completely different long secure passwords. Turn on multi-factor authentication, two-factor authentication on any account that will allow it. And then have social engineering awareness training. And I have a whole program. We don't have time to get into this more of this today. There's some information in your materials. But if you really, these scams are very real, very costly, and hitting law firms of all shapes and sizes on a regular basis. I am more concerned as a risk manager about cybersecurity and these types of scams than I am about my practice. It's that bad. So, and phishing attack is another one. Phishing, for those of you that don't know, and this can tie into your IOLTA account or the operating account. It's combining the words voice with phishing. Think phishing emails. phishing. It can be done in live voice. There are a variety of ways these attacks occur, but it's voice driven. So let me give you an example. And just to give you an idea, suppose you receive a call from someone claiming to be from your bank, okay? The caller is quite pleasant, very professional, and she or he will tell you there's been some suspicious activity in your account, and she will also accurately provide a little personally identifiable information. The script will typically go something like this. Hi, I'm calling from, Wells Fargo, whatever your bank is, and it's going to be your bank. Someone has been using your debit card ending in 8774, and that's going to be correct. I'll need to verify your social security number, which ends in 3006. That's going to be correct. And then you're going to say, is this correct? You're thinking, oh my gosh, yes, they have all this information. They must be in my account. This is Wells Fargo. Well, it's not. But now, if you will provide me with your full debit card information, we can stop this unauthorized activity. And it may be something like somebody's trying to buy, $1,500 laptop off Amazon using your credit card or your debit card or whatever it might be. Okay. And so they're working. You've given them the information, which they didn't have, by the way. And you're saying, thank you. I appreciate, we stopped this purchase and thank you. I love Wells Fargo. You security people, you got it. And they're emptying out your account in real time as you talk to them. I'm not making stuff up. Phishing has led to tremendous losses, not only in the States, globally, but it is absolutely happening here in the States. Well, how do you think A staff person might respond if they got a call like this. And it happens to deal with the IOLTA account. Oops. Do they even know? And they said, well, how does this work? You know, the last four digits of your social, these bank accounts, these credit cards, all is widely available thanks to things like Equifax breach. And I'm not picking on Equifax, okay? Well, everybody, there's so many breaches out there now. The problem in the past has been there's just vast amounts of this data, the last four digits and on and on. And it took a lot of time to kind of work through that. AI is in play now, and they can aggregate this so they know, who they want to call. They know what the right last four digits of different things are. It's a very professional script. These people are very well trained, and sometimes it's just an AI voice doing it. And you will not know that it's not human. There's a human behind it, but that's not the voice you're hearing. It's just whoops. So careful, careful. Okay. Things that you can do, well, training is going to be one. Uh, Never trust caller ID because they can spoof the numbers. Well, that is Wells Fargo Bank. I don't care. It's not them. Use two-factor authentication on all these accounts. I never give out information to anybody if I did not initiate the call. And I think that's one of the big ones with something like this. Well, thank you for telling me this problem with my account. I'm going to call you right back. Bye. And then I'm going to go because I know what my bank account number is in terms of the phone number. I can look it up online and go to a legitimate site. I'm going to see nothing's going on. So there are a variety of ways. The last thing we can talk about, and believe it or not, counterfeit law firm trust account check scams. It really is a problem. Now, a lot of people will say, well, if somebody creates a fake check on our account and cashes it, it's not our problem, it's the bank's problem. And you're right. But if you think that there's not consequences or ramifications, you are wrong. Let's say the check was written for 250,000. They don't put that money immediately back in your account. They're going to investigate, and this can take a month or so. You got a problem. Misappropriation is likely coming into play unless you have 250,000 lying around that you can put the money back until the bank fixes the problem. What I want to say here is a lot of people think this isn't a huge issue because of all this other stuff we hear. It actually is. Counterfeit checks, scam artists are creating literally millions of these checks every year. Okay. And there are a variety of ways that they do this stuff. Lawyers are not immune to this scam because people know that you're moving a lot of money through. So there's some little things that you can do to try to prevent falling prey to this. First, and honestly, this needs to be said because this is sometimes how it works. If you're particularly in the plaintiff personal injury arena, tell your clients not to post a picture of their check that they just got for $500,000 on their Facebook account or any other social media. Please don't, and explain why. If you're sending out a lot of checks and just putting them in an unsecured mailbox out front, take them. You need a secure mailbox or take them to the post office. And the reverse would be true if they're being sent to someone's home. Again, if they don't have a secure place to pick it up, we need to do something a little bit different. I even had a friend who had literally watched a car pull up in front of his house after he put a bunch of mail out to include paying some bills. Person pulled everything down, took the mail, and hightailed it out of there. Put up camera traps to try to catch you. And there's again because there were some problems in this whole neighborhood. Very nice neighborhood, by the way. Um, this is happening quite a bit. So don't make it easy. I'd also use checks that have built-in security features, watermarks, safety holograms, invisible fluorescent fibers, and the like. You could also consider enrolling yourself in your bank positive pay program if they have one available. So there are some quick thoughts. I see that we are pretty much up against the hour. Um, I hope you found something of value. And I see we have a question or two here, so I'll try to get that in just a minute. I do want to share that while I am a risk manager for ALPS, I am not a traditional risk manager. I don't manage the risk of the corporation. I am hired by ALPS to be a risk manager for the bar at large. In essence, I am your risk manager. You do not need to be an ALPS insured to visit with me. There's no cost. Here's an email address if you have a question or concern, something I can help with. How do map policies work? What can I do to, work through this conflict problem? Whatever it might be. Just think risk management, ethics, computer security, cybersecurity. Reach out. I'm happy to help. So that's it. Nina?
Thank you so much, Mark. Always such a pleasure having you with us and presenting with us. We do have a couple of questions. Our first question for today is the case where the lawyer gambled and then replaced the client's funds. Is that a written opinion, or where in the state did that happen? Sounds like this person's interested in diving a little deeper into
Well,
the
I
case.
need to be a little careful because I don't want to. This is one that you do enough digging could probably find out who it is, and I need to be careful about that. I can say a court was not involved. This was a disciplinary matter, and I'll say it happened on the East Coast. I'll leave it at that.
Perfect. Thank you, Mark. And then we have a couple of questions from this one, so I'm just going to kind of
Yeah,
summarize it.
let's
Um,
go.
this this person said, I have some clients with large dollar amounts that must be held for extended periods in escrow. How could I set up an account to allow interest to accrue on that amount? Would I set up a separate IOLTA for just that client? What would you recommend there?
You don't need to set up an IOLTA account. Um, if, again, always check your rules, okay? But if a large amount of money will be held for an extended period of time, it is permissible to opt to open an individual trust account where interest is going to accrue and the client will get that. And you just make a decision and document that. And I would set the account up in the client, whether it's an entity or, I don't know, but in the client's name and their information so that the interest statement, for tax purposes goes to the right person. You see where I'm going with that one. So, okay.
Awesome. Thank you, Mark. And then the same person asks, if I can't locate my client to disperse those escrowed funds, how long should I hold them? Would sending them to the state's lost funds account protect me from liability if the client reappears?
It's a good question. And again, each state will have some guidelines and typically even an ethics opinion. Not all do, but you generally need to do what what a reasonably responsible, I guess, attorney would do to try to find the person or client. Again, sometimes entities or something. So you need to do everything you can, and I would document that process. Taking a couple days to look on LinkedIn or Google isn't going to cut it. You need to go further than that. But after a while, and I would try to hold it. It's last known address. You do different things, but it does eventually. Yes, you can turn it over to the state in accordance with the regulations of the state. That varies again too. And will that protect you? Yes, as long as you have this documentation of everything you did. It just becomes abandoned property. Um, so yes, turning it over to the state is the only thing you are allowed to do with it. You can't keep it yourself. Or we've had the lawyers say, "Well, I'll just donate it to a charity." No, it has to go to the state. It's abandoned property. Okay.
Thank you, Mark. And then I know we're a little over time. So our last question for today is, what steps can small or solo firms take to establish robust internal controls without having a large accounting staff? How would you kind of recommend balancing that?
Boy, I am. So if we're going to do it internally and it's sort of a DIY or DIY, um, oh DIY, yes, do it yourself. Um, I'm just going to take some CLE. And there are some good resources out there that explain these accounting processes in much more depth. I would probably also look at some type of accounting package that works well and has been designed for law firms. And there are platforms out there that certainly work with the rules, that are set up to deal with individual sub accounts, et cetera. It's not too hard to set up. So I would just do a little education, um, and Go for it.
Awesome. Well, thank you, Mark. And if we weren't able to get to your questions today, you have Mark's contact information on the
Yeah.
screen. And you can always reach out to him, and you can also always reach out to us if you'd like us to facilitate that at support.justia.com. We want to thank you all so much for joining us for another Justia webinar. With your Justia Connect Pro membership, not only do you get that access to CLE, but you can also level up your online presence with an enhanced directory profile, with a pro badge, removal of competitor ads, access to our AI-powered Justia chat to help boost your leads, and $200 off of select Justia marketing solutions. Have a wonderful rest of your day. Thank you all so much for joining, and have a wonderful rest of your day. Thanks for watching. We hope you enjoyed this video, and if you did enjoy it, please click the like button and subscribe to our channel for more videos on law practice and legal marketing. See you in our next video.